Howdy peeps, how you guys doing? This is Mark Allen coming to you from Northern California. I am your financial planning dude, and that's spelled D-O-O-D. So I wanted to talk to you guys today about how to get money out of a traditional IRA tax-free. Yeah, tax-free. I'll tell you about that in a moment. I'm on my way to the grocery store because we're cooking bagels today and we're making corn tortillas for dinner, all this from scratch. So I gotta hit it up, get all the Sunday meal stuff going. Anyways, you came here to hear about how to get something out of your IRA tax-free, right? You didn't want to hear about the bagel story. In any case, so let's talk here. There are a couple different ways. I love to tell a story how my father-in-law, he's 88, he's got these required minimum distributions, and he's paying about it every single year. He comes and says, Mark, how do I get this money out of my IRA without paying taxes? I worked hard and diligently and paid, into my savings. I deserve to take it out tax-free. And I said, well, you got a tax deduction for putting it in there. So, the IRS don't give you nothing for something. Something for nothing? Yeah, that's the way it goes. Anyway, so I tell him he's got to pay the piper when he gets that money out. And he goes, well, why can't I just leave it in there and have you guys inherit it? Now, that's fine. I don't mind that, but you got to take your required minimum distributions. Okay, so there's no hope for him. There's no way he can get that out of the traditional IRA without paying taxes, but that's because of his specific tax situation. But if we do planning or look out for those optimal opportunities, we can really get a lot of money out and put it into a Roth IRA, which is tax-free for the rest of your life, without causing you any tax. So that's great. Okay, we've heard about Roth conversions. That's where we take the money out of a traditional IRA, pay tax on that money, and throw it into a Roth. That's great. You're going to pay tax on that money. We don't want that, okay? So what we're looking for, and I see this all the time in my practice, is a break in income. And what I mean by that is somebody may be changing a job, they may be, going on sabbatical, or having a major shakeup in their financial situation temporarily. We saw this big time in 2008, right? But I see it occasionally still now, just people doing stuff. And usually they will still have their mortgage, they'll still have property taxes and all this good stuff for their itemized deductions. And with the new 2018 tax law, we even have a really high standard deduction of $24,000, right? But they have very low income. They're not going to use their standard deduction. They're not going to use their itemized deductions. Or they may have losses from their rental properties. See, we want to soak all those things up before we lose them forever. If we don't use that standard deduction to its fullest, 24 grand, it's gone forever. Why leave that on the table? That's free money. So what we want to do is generate enough money by doing a conversion from our traditional IRA over to the Roth IRA. Soak up those tax deductions we're going to lose. And we got money out of the traditional IRA tax-free. Now, if you really want to supercharge that strategy, 15% tax bracket is cheap money. So really, if we can get money out of the traditional IRA doing this conversion, we might want to pull out even more and maximize the 15% marginal tax bracket because it's cheap money. You get that money out, it sits in your Roth IRA. Here's the deal. Once it's in the Roth IRA, it grows tax-free for the rest of your life. If you wait until age 59 and a half, you get that money tax-free for the rest of your life. There's no required minimum distribution on Roth IRAs, which is awesome, so you're not forced to take it out. And by doing this, you are potentially saving even more tax dollars in the future, because when you turn on Social Security, if your income's low enough, Social Security is tax-free. So at age 70 and a half, when you have to take required minimum distributions from your traditional IRA, you've been diligent and you've been getting that money out of the traditional IRA before 70 and a half. So now 70 and a half hits and you're required to take money out of your traditional, you're required to take out a lot less, which means Social Security will be taxed a lot less. So there's some double whammies there. In any case, I hope I've given you some valuable information to save you oodles of dollars. I'm all for doing things legally and right, but if I can find an opportunity to save tax, that gets me excited. So go out there, kill it, leave me some comments down below, and go try to make some bagels. They're really easy and they're yummy. I did one with Parmesan cheese this time. Oh, it's so good. Okay, we'll talk to you guys later. Thanks for tuning in to the Financial Planning Dude, spelled D-O-O-D. I'll talk to you later. Bye.